and welcome to Big Deal. Today we have with us Sunil, Kaul, the Managing Director at Carlyle Group Asia, right here with us in the studios, traveling from Singapore. Now, Sunil, so good to have you in our studio here. And lots happening in financial services sector, of which you are an expert. You have made several investments in India in this particular space and some big returns also in the past for Carlyle Group from this sector. Now, first, looking at the financial services space on the whole, which is so interlinked with the central bank actions across the world. Now, bond yields have also created a fair bit of chaos in the global equity markets and has its impact all across. And on the other hand, the economic concerns that are prevailing around inflation and high interest rates. Putting all this together, how do you view this sector and the global trends in this space?
Well, thank you for having me, first of all. Look, I mean, at the end of the day, financial services generally, and certainly in emerging markets, but generally is a proxy for the economy. So the question that you're asking is really about the economy and what happens. And, you know, you can probably have a range of different predictions, but the reality is that globally, it's a difficult time, okay? Now, whether it's hard landing, soft landing, you know, we can debate. But the reality is that inflation is a problem. Interest rates are likely to remain high for a period of time, which is not something people are used to for a long period. The geopolitical situation is a little unsettled, whether it's Europe, whether it's China versus US and so on. We haven't, because of the COVID-related disruptions, people are looking at reorienting their supply chains, and that creates cost inefficiency. It puts more pressure on inflation and costs and so on. So it's not an easy environment, and when you kind of, put it in the context of elections in key markets, the US, obviously India, Mexico, UK, Taiwan, all happening in the next 12-15 months, it creates a whole bunch of uncertainty. The net direction is that there is a level of stress that is building up in the system.
So which side of the argument are you on about the economic slowdown in the US?
Well, it certainly will be a slowdown. Now, whether it will be X or Y, frankly, it depends on so many factors. If they can't, they're struggling right now with even getting the budget approved. So that creates uncertainty. And even though probably they'll finally do it, as you saw with the debt ceiling, for example, and these uncertainties in this kind of time frame, environment, they're not helpful. Now, whether it goes here or there, it depends on so many random factors, but I don't think that there is any doubt in the fact that there will be headwinds. And it will be further complicated in terms of the politics of it because of the elections, because, they will want to take advantage one way or the other. And so it's a little murky, isn't it?
So political risks, geopolitical risks. These are two very important events for the economies and the markets. Now, a lot of investors are pinning their hope on the turn in the interest rate cycle. Now, looking at this space so closely, again, what's your view on that to happen? Because a lot of euphoria will come back to the market only on the timeline of that. Because as you said, the absorption capability is right now there because of the liquidity flush that we saw. But then if the interest burden is there for too long, the absorption capability will wane off, and therefore the liquidity situation can get tighter. So before that, the turn has to happen.
Look, I think the question that you're asking is basically what would drive a downward correction?
Exactly, the turn.
And it seems at this stage, it's difficult to see very compelling factors that will lead in that direction.
Fair point made. And what is the impact of all of this happening in the world? Because India has been a beneficiary of liquidity flush that came in earlier. And now it will see the downside of what is happening across the world. What is the impact that you see on India, and especially the financial services sector, which gets hit hard if the economy is impacted in any form?
Well, look, I think first of all, it's relative. India is relatively doing well, and to the extent that investors have to make a choice, and if India is an attractive destination, so even if things are looking kind of murky, but India is doing kind of well, so you benefit from that. But I don't think we should get carried away. The reality is that if there is significant stress in the global system, we are not an island.
Yes.
We are a large economy. We are connected. The investors, global investors, are sort of influenced by what's happening. So any persistent problems elsewhere, coupled with high interest rates, which therefore gives people an option not to take the currency risk, not to, venture into riskier equity investments and so on. So I think capital flows, particularly from foreign investors, there will be a higher threshold. And the good thing, of course, is that India has a lot going in its favor, which therefore means that it might be easier to cross the threshold, but it will be a little harder than it was, maybe a year ago or 2 years ago.
So given this scenario, how has Carlyle's view, your view, changed on India over the last few months?
We remain, well, I don't know about last few months. I think over a period of time, our view on India has been very bullish, very strong. We don't look at things from a 3, 6, 9 month perspective. We're not a portfolio investor in and out. We don't trade securities. We believe that if you look at the sort of the underlying dynamics of the market,
yes,
the demographics, very strong financial system. I think RBI has done an excellent job in making sure that the financial system is robust, capital adequacies are okay, a stable political environment, this fantastic digital infrastructure that we built around the India stack and so on. The fact that from a geopolitical point of view and the emergence of this multipolar sort of construct, India is becoming a key player. Yes. Reasonably strong relations with a whole bunch of large economies around the world. So I think India is very well positioned. We have believed that to be the case. Yes. And as our incomes increase, what is not immediately apparent, yes, is that it's not just a question of per capita going from $2,000 to $2,500 to $3,000. But the spread of income, yes, is also important, because if you look at the first tier, second tier, third tier, as they move into, incomes go from $5,000 to $10,000 per capita to $20,000 per capita, the kind of needs you have, yes, change dramatically. And yes, so you see increase in demand for consumer durables, you see increase in demand for wealth management products, health insurance products, travel, education, whether in India or overseas and so on. Yes. So there is a discontinuous change, yes, in the consumption of these products, and that's the opportunity for India.
That's right. That's what you are keenly looking at. But Sunil, you have invested about $1 billion in India.
Lot more.
But currently you have Yes Bank as well as PNB Housing Finance. What's more on your radar right now, and how much more are you looking to invest in the next 1 year or a shorter time horizon?
Yeah, look, we are, first of all, we don't actually go with a certain amount of investment in mind. As I said, we're not a portfolio investor. We don't say we allocate this much here. Over a long term, we probably have some level of portfolio allocation, but not on a deal-by-deal basis. For us, the critical piece is that if we can find a good opportunity, and as I said, we are very bullish on India. And as India is an economy where financial services sector will be critical. And I think RBI is a fantastic regulator, which gives us a lot of comfort on the predictability of how these investments will pan out. So we look at good opportunity, good management teams, a good partner, if we can find one, and most importantly, whether we can make a difference.
Yeah.
If we can add value, if there is a way for us to make 2 + 2 5, then we will invest. And obviously we have to be sensitive to valuations and so on. But for me personally, what I've seen at our firm is that the critical piece is the business something that, has strong fundamentals? Yes. Is it a good management team or a team to which we can make some additions so that it becomes strong? Are the values that we have shared with the other stakeholders, and can we make a difference? Can we bring our global platform to work? Can we bring our ability to the analytics around data and so on, or our experts, our senior advisors and so on? So if we think we can make a difference and drive the business forward, we will invest. And it doesn't we're not limited by a certain quantum or a certain cap.
All right.
If we reach 4 billion, 5 billion, maybe that question becomes relevant. I'm talking financial services because overall we invested more than 6 billion in this market.
That's right. And I will pick your brain more on the themes of the financial services that are interesting to you. But that's after a very short break on Big Deal. Stay tuned to CNBC-TV18. Welcome back. You're watching Big Deal, and we are in conversation with Sunil Kaul, the Managing Director, Carlyle Group Asia. So, Sunil, many interesting themes you spoke about. Let's first focus on your portfolio. You, of course, have had very hefty returns and profits made from the Indian financial services investments in the past. Now, with Yes Bank as well as PNB Housing Finance. Yes Bank, how do you see the growth trajectory for this particular company, and are you seeing some of the potential, looking at which you actually invested in this company and betted on this company, that being played out now?
Look, speaking as an investor, I think the banking sector in India is poised for pretty strong performance so long as you have the fundamentals around risk management and your business model in place. The bank went through a difficult time. I think they've done a fantastic job, as you saw during the transition period from 2020 onwards. The deposit franchise has flourished over a period of time. They've repositioned the bank from being very wholesale, project finance, long-term exposure point of view to more towards SME and retail. And they have, very, very strong transaction banking capabilities, really recognized by the system as a whole. So we are very pleased with the work that they have done. We think that, if you believe in the fundamentals of this market, which we really do, and I think you can tell that I do, there is no reason why there should not be a good investment. Now, whether it, people sometimes get a little, and I'm not talking Yes in particular, but in general, people sometimes get a little antsy about, 1 month has elapsed, 2 months have elapsed, and, where is the dramatic transformation? Those of us who have worked in the industry for a period of time, it is hard work. You have to do it step by step. You can't rush into it. You can't make a different mistake because you are in some sort of a hurry. And I think that the bank and the numbers speak for themselves, is making strong progress. It will take time, but they are in the right direction, and we are quite comfortable with the investment we made.
And you spoke about housing finance, and you have an investment in PNB Housing Finance. So, Sunil, talking about the lessons from the past, and how is the future looking for that particular investment?
Well, it's a great company, and I have always, said that it is a wonderful company. During the IL&FS crisis, etc., obviously all of the companies had a bit of a challenge. I think the company is again doing a great job in terms of repositioning itself. It's almost entirely retail now. It used to be a slightly different proportion, 80-20. Now it's 97-3. I think we have a fantastic management team in place. They can talk to the specifics of the performance. They're delivering good returns. We had a very successful rights issue, which we participated more than our proportion. That should give you a sense. Even after having been invested there for a period of time, we put in more than what was our pro rata because we believe in the story. I think they are building an affordable housing segment, which is actually doing extremely well. But since it's a little smaller than the other, it's not probably as well known. They've done a great job in managing their liability base. They have a fantastic deposit franchise. We have a great board. Our partnership with PNB is wonderful. So I think we are in a sweet spot. The stock price has responded accordingly. But I think it's at the very beginning in terms of the transformation of the business. So we feel good about the team. We feel good about the investment. And I think it's another example of where an investor like us, we made this investment in 2015.
Yes.
This is 2023, it's 8 years.
Yes.
But, when we feel that, and particularly in financial services, that we can make a difference by providing capital, by providing time, by making sure we have the right team, we can drive the business to greater heights. We stay. We are not a 3-month, 6-month, 9-month, 12-month investor. And I think that shows.
And you spoke about the affordable housing finance space in PNB Housing Finance. Do you think in future it could be one of the key growth drivers? And what is your view on this space?
I think it will be an important part of the overall mix. Once again, one thing I learned in finance, and I've done it for a long time, is that you can't get carried away. You need to have a sense of balance. Because things, there are things and then things you don't know, but overall, if you have a little bit of diversification, it helps.
Yes.
And in the PNB housing, obviously there is, there's the prime and there is this and a little bit of LAP and so on. But leaving PNB aside, overall, affordable housing segment is an important segment. The reason it became hot is because perhaps the banks were not servicing it as well, which opened an opportunity for other players. It is getting competitive. I think valuations there, people need to take a hard look at whether the valuations are fair. I would say, therefore, that it's a great opportunity. It's important for people to service this segment, but it has to be done in moderation at reasonable valuations.
So insurance sector, what is it that you like in insurance, and are the valuations of that particular theme conducive for an investment according to you?
I think insurance sector in India has a long runway. And again, I'm not talking the next 3, 6, 12 months. The fact of the matter is that the Indian consumer is not adequately insured. And I'm talking protection insurance, right?
Yes.
Which means leaving aside the savings element and the units and all that, unit trusts. Also, as a percentage, as people move, like I was talking earlier, when people move from this income segment to this income segment, their needs suddenly become very different. So the long-term prognosis for this or the prospects for this are pretty solid. And, there are all kinds of riders you can do, and I feel fairly bullish.
Yes.
So long as you believe that the Indian consumer, Indian economy, per capita income, the distribution of income will do well. In terms of whether the valuations are justified or not, I feel that, I think the regulator here also has done a pretty good job, okay? There is, as you know, in insurance, there is a fair amount of art involved in calculating this embedded value and, and so on and so forth. I think the Indian insurance industry hasn't had big accidents in terms of their investments blowing up. They have to invest the premium, right? So overall, I think the balance sheets are clean, and given the runway ahead, I feel that the valuations are not unreasonable. But one company, of course, versus another company is a different matter.
All right. And in insurance, what do you like as a theme?
I think all of it. I like health insurance. I like life insurance. I think in terms of general insurance, the market is not as attuned to things like property insurance, etc., unless your mortgage company wants it or something. So there is runway in all of these.
All right. So looking at the entire conversation now, Sunil, what is that one space that you're most interested in the financial services space, where you could be looking at a future investment in India?
I don't know if there is one sector. I think
one or two themes that are right now more attractive.
Indian consumer getting more affluent, Indian consumers' needs expanding, becoming more diversified. I think that is the core theme.
What is your view on fintech, and what kind of fintech do you like? Would you bet your money on credit-giving fintech companies?
First of all, I think we need to acknowledge that the fintechs in general, broadly speaking, have done a tremendous service to the financial services sector. Okay, They have come up with business models, ideas, sometimes maybe little, tricky in terms of regulatory sense, but generally they have pushed the envelope.
Yes.
In terms of making credit or making insurance or making mutual funds available. And that's a good thing.
Yes.
Because very often that has driven the banks either in cooperation with them or as a sort of, trying to emulate them. They have improved their processes, the customer experience has improved and so on. So I think that's been a positive. Secondly, they have reached out to customer segments that in the past was much harder for banks to reach. And they have, in a way, therefore, either again working through banks, with banks, or giving an example to banks, shown how to do that at a reasonable cost.
Yes.
So I think that is a positive.
Yes.
But also, I think there are, questions. There are questions around, are we going too far ahead in terms of unsecured credit? It's not just, people will show you ratios about unsecured credit versus GDP, this, that. I don't think it's just the question of ratios, but it's also a question of how fast you increase, how well trained and how well used to that the average consumer is. I think that's a concern in my view that I'm sure the central bank, Reserve Bank is looking at, and something to be mindful of.
Are you seeing enough attractive propositions is what?
I think we have a decent pipeline.
Yes.
And, again, I go back on the valuation question is if we feel that at whatever valuation a deal is available, we can make a difference and therefore generate returns, valuation is just one of the inputs into that.
All right, Sunil Kaul, it's always a pleasure speaking to you. Thank you so much. Lots of takeaways coming in for the financial services sector in India and what you're looking at. Thank you so much for stopping by.
Thank you so much for your time. Appreciate it.
Thank you. Thank you so much, Sunil. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.